Now the next presentation is on Become a One-Stop CFO for your HNI clients, presented by Mr. Manu Awasthy, founder and CEO of Centricity. Welcome Manu sir on the stage. I'm sure by positioning themselves as one-stop CFO, financial advisors can differentiate themselves from the competitors and build a long-term relationship with their HNI clients. So let's hear a big round of applause for Mr. Manu Awasthy.
Good afternoon, everyone. I think I'm audible. Okay. Well, it has been a very interesting session since morning, and I think so. I will probably break the flow of my presentation because it has been. I think so. Deepak had set the tone very well in the morning, talking about being a hunter, being a farmer. I very closely resonate to this aspect of being called a hunter or farmer because I have been personally a professional private banker for almost my entire professional career. I worked with Citibank for almost 9 years, and then I worked with AAFM Wealth as a senior private banker for almost 10 years. So I have seen the customer side very, very closely. So I have always had my ears to the ground in terms of customer psychology, behavior, expectation, mismatch of expectation. There are a lot of things which we have seen and grown in the career from a hunter to a farmer. And really, I've not been able to really make much of a difference between the two, because before you farm, you have to hunt. And hunting is a great skill set, and both are equally important for growth, because hunting is about acquisition of newer clients, and farming is about garnering higher share of wallet and ensuring that your client is very well guarded around you, so that there is no leakage or there is no third person who comes into your relationship or the association. So both of them are, to me, to my experience, I would say it's very closely interlinked. You cannot really dissociate between the two. Both are growth drivers in its own ways. Even today, when we are here to present ourselves, all of us have our stalls over here. Actually, we are hunters. What am I doing with the Centricity stall over here? I'm hunting. I'm looking for new clients. My client is not your end client, but my client is you. And once you start working with me, I need to ensure that I garner higher share of wallet with you. So it is a very interesting thing, and as I said, Deepak had very beautifully set the tone of this entire conversation. So I'm not very sure whether I would really like to go through the presentation, but I would rather keep it more of an open discussion, and at some point in time, if anybody wishes to really ask me a question, I'm more than happy to answer that. But I will set the context of this point, and this really comes with 2 decades of experience into managing clients from an affluent segment, which one used to look at in Citibank, to a ultra HNI segment, ranging clients from 50 lakhs of rupees going up to 1,000, 2,000 crores of portfolio. What are the most critical aspects in terms of client engagement? Though my line of business at Centricity is no longer a B2C client engagement, but what are the most important cornerstones, and what has been the reason why few people have been more successful vis-a-vis few people who have not been? So it's more about understanding the traits of being a successful banker. So that's more the context of being a CFO. So I will just jog back the 2-3 decades, and many of you are senior to me in the industry and more experienced than me in the industry. If you remember, every businessman used to have one person who around him, his entire financial world used to pivot. And he used to be called a munshi. What that munshi used to do for the client, he used to maintain the records of all his expenses, business income, earnings, and a very common thing which we even used to see in movies in 80s and 90s, ki munshi ji ko bulao wo batayenge, something like that used to happen. So the role of a munshi was to basically be the back office to the person who has the wealth. And that munshi was a fairly strong and an influential person in his life. So any vendor of that particular entrepreneur or businessman, if he wanted his payment, he used to go to that Munshi ji because Munshi ji had the record. So what is CFO? What do we mean by one-stop CFO? One-stop shop CFO to a HNI or a normal client basically means the person who keeps the records for all the financial net worth or assets of a particular individual, family, or a business house, where the promoter or that individual HNI or a client is circling back to that particular individual to understand कि okay, what is it that I have? If I have a requirement for a certain expense, which could be business growth or anything else, where do I pull out that money and where do I put the money on the other side? That is a very pivotal role. Now, this is what exactly large institutions do. Another thing from the morning presentation, which I will merge in my conversation, is about growth and life cycle of an independent advisor. Let me start with the point that how does the life cycle of an independent advisor is different to a wealth manager in a large wealth management setup. I will take a minute or two on this, explaining it to you. A wealth manager, I was a wealth manager. My life cycle was, I used to come to office. On my mail, I used to get the products. I used to get what exactly I need to offer to the client. I used to get market commentary. I used to know about what events are occurring. I used to get to know about if there is any special requirement that I have from my client which I need to fulfill. I used to have a backend, which is the backend product team, where I would send an email or I will pick up the phone and call somebody. That person will respond to me, okay, this is what it is. I mean, whether it is some specific trade or general pricing about a bond or something, I used to get. Everything used to come tailor-made to me, and my job was to then go and offer that solution to the client to meet his requirements. So my effective sales time in a large setup was roughly around 80 to 90%. And that is the reason large institutions continue to grow, as well as the individual relationship managers or wealth managers also continue to grow because their effective sales time is very high. They spend 80 to 90% of the time. On the other hand, when we look at the life cycle of an independent financial advisor or a distributor, his effective sales time, and there could always be an exception, so don't hold me for this, their effective sales time is anywhere between 40 to 60% because of the following reasons. First, he is the one who has to identify the product and learn the product and understand the product for himself. Until unless he has not learned and understood the product, how will he find the fitment to it of that? Now, that has been one of the primary reasons why mutual fund as a business has grown so very well, because it has always been a very simple vanilla product offering to understand and execute and implement and explain it to the client. Second part is he has to then execute those investments what he has. And third aspect of his journey is reporting and MISing. Now, reporting and MISing has been a fairly challenging task in the industry, where mutual fund, for the simplicity of it, has been very easy to report. And the moment you look at alternate beyond mutual fund, the execution as well as reporting MISing has been extremely tedious. How many empanelments you do with PMSs, AIFs, how do you go? Now the world is getting democratized and there are more players coming and offering solution. But this was not the same even just 5 years back. Probably post-COVID things have really fast-tracked a lot in terms of convenience. So the effective sales, and that is what something which leads to the growth. Because if you are not spending that much of time, then how can you get the business out of it? And second reason, which is more structural in nature, which we cannot do, a large institution, the investor always have that belief that, okay, institution is bigger than the individual. Here the individual is the institution for the client. And in my experience, the alignment of interest of an independent distributor has been always greater than a wealth manager or a relationship manager, because wealth manager always look for that shorter stint, 3 years, 5 years in his role, and he has to grow, and then he has to move on. He moves on to a different division within the institution. Whereas when it comes to an independent advisor, you have to stay with the client for a very, very long period, probably 5, 10, 15, 20 years. So that alignment of interest is far more stronger than anybody else. Having said that, the growth doesn't come in. And how do you engage the client? The moment your client becomes a certain scale and size, 10, 15, 20, 30 crores, it is the larger institution wealth managers who come and penetrate into that relationship. Again, exceptions will always be there. There will be certain relationships where nobody can get into it, but it becomes a loophole for somebody to get in. Now, this is actually the crux of the issue today, that while you are more aligned to your client than anyone else, why is it that it is slightly more challenging for you to grow, both in terms of share of wallet and in terms of acquiring more clients? Some of you will say, okay, we have reached a certain life stage where we don't want to grow. We are happy managing what we are managing, and that is completely respected and understood. But there will be another set. I mean, today I met at least 4 or 5 people who are just starting their journey as financial advisors, who have come, must be sitting over here, who have come. I have met some people who are way too senior to me also in the industry. They have been in the industry for 30, 35 years also. So there is always a mixed bag of people. But having said that, it is extremely understand the growth trajectory. So even in the panel discussion, people were very rightly talking about adoption of technology. Technology, how it is going to simplify things, how it is going to be a growth enabler. And fact is, whether you like it or not like it, somebody who does not change now over next few years, I mean, it's not any longer going to be about 15, 20 years or 5, 7 years. Few years is 12 to 18 to 24 months is what I'm talking about. Because being on the other side of the table, working on technology, believe me, the kind of solutions that somebody is going to get. I will give you a scenario, what kind of a solution will be available with all of you in, let's say, 2 years' time. What kind of a situation? One point which was made, and I have a slightly different view on that. Can technology do some of your role? The answer is yes. Technology will be able to do some of your role. And I am giving one example, just don't hold me for this and come and ask me when this will be available, but it is work in progress, I would say. So a distributor typically has, let's say, 200 clients. Effectively, he is working closely with 40, 50 clients, and then he is trying to grow his business with other clients, which are balanced 160 clients roughly. The technology, the way it is going to work in future is the fact that the system will be able to read your client's risk profile, his model portfolio, his current portfolio, tell you exactly, not the client, that what are the rebalancing opportunities in the portfolio, what is it that you need to buy and sell, and from a product marketplace, it will pick up the product and let you know, okay, this bond, this mutual fund, this PMS, this AIF is what is ideally suited for your client. On a click of the button, if you okay it, that investment request will go to the client and client will do the trade at his level. This work is in progress. I am just not talking hypothetically. This work is in progress. This is what the digital efficiency. So suddenly from managing 200 clients, you will have the capability to manage 400, 500, 1000 clients. This is actual work in progress. So there is, coming to the core, before I conclude my point, what is the purpose of being a digital CFO? Technology will help you enable, aggregate all his information across all his investments, be it real estate as an asset class, be it unlisted equity investment as an asset class, bonds, AIFs, mutual funds. And once you have full-blown information of the client, the propensity of your client to come back to you and use you as a sounding board before taking a financial decision in terms of investing, buying, selling something, is going to be controlled and channelized through you. And with that ability that you have, which technology is going to provide, your ability to retain higher share of wallet is going to increase. Plus, if your client has that experience, so you are certain to get more reference from your clients in terms of what other people are not experiencing is something what your client is going to refer you, go and meet my other friend and help him with a similar solution. Believe me, this all will be done at 1/3 of the legwork which you are doing today vis-a-vis increasing your work. So that is the whole concept. I'm sorry I didn't went through the presentation because I thought the entire session is going so beautifully. Let me talk about more about the practical aspects rather than just going through the presentation. Thank you so much. Somebody asked the question on FX trading. So yeah, sir. I would rather give an answer to your question. So there is a lot of work which is happening on the algorithmic FX trading, which is there. FX trading is not a product which is for retail consumer, and it is a highly volatile product to look at. So I don't know what was the context of asking you, for you to ask the question, but my limited knowledge says, and I have done Forex being a banker a lot, it's more of an institutional product. And if you are looking at it as a product, it is kind of an asset allocation in a client's portfolio. And there are a lot of tools and platforms which are available to do FX trading as a financial product. Now the taxation is at marginal rate, all those things really doesn't make it extremely lucrative. And as I said, I'm a very simple person. The thing is, the more you keep your client investment portfolio simple, better probability of a return will always be there. And it will be easier for you to manage because complex products create more complexities, and in a bad market situation, it becomes all the more difficult. Why did you do this when simpler things were available? So I will always speak from the side of an advisor because that's what I have done all through my life. So my answer to your question was this only. It is available. There are enough 10 platforms I know which do FX trading, but it's a very complex product and most of us would not even get into it. Anything else?
Sir, I think you said that the work is already progressed as far as the,
Sir, I'm sorry. Can that be answered at the stall? Because since we are running short of time. Yeah. So I think that can be addressed at the stall if the question is related to a company.
Let me just take his question.
Okay, please.
I think there are certain companies which already have something called as a robo-advisor. So maybe this is limited to a specific asset class. It may not be all the asset classes.
No, what I am talking about is multi-asset class.
Multi-asset class. So
It is bond, MLD, insurance, PMS, AI, everything included.
I have not seen so far anybody having a robo-advisory as far as multi-asset is concerned. But I think single asset, I think there are people who are already providing.
I'm happy to share Centricity is the first company who is building robo-advisory for the advisor. And what I'm telling you will be live with us soon.
Thank you.
We are a B2B platform and we just are there to serve you with all these solutions.
Sir, I'll have to cut. I'm sorry. The questions related to the
I'm
particular
available
company.
outside.
Yeah, the questions related to the particular company or the exhibitor can be addressed at the stall because it's, so we are try to managing the time. And I'm sorry, not taking up the question here, but that will be addressed at the exhibition.
Okay.
Thank you.
Thank you so much.
Thank you so much.
Thank you, everyone.
Thank you so much, sir.